funds have different tax drag. So if a fund has a lot of turnover or a lot of distributions and you're in a high tax bracket, that fund is going to deliver you a net after-tax return that is much lower than what the headline return is, even after you take the fees into account. So when you think about any investment you make, oh, and then by the way, if you have an advisor and the advisor is wrapping the assets and charging you a planning fee, well, you have to take those line items kind of into account when you think about your actual net return that you receive. So there's a top line fund performance return, and then you've got fees, and then you've got tax drag, and then you got advisory. So everyone's very clear with that on the investment side. Very similar thing going on here in life insurance, where there's a gross rate up top. That's the dividend interest rate. And then you have a mortality deduction, which, just pause there on this because this is really, really important too. Mortality is not a cost. This is something people get really confused about because they say, well, what's the IRR on my cash value?